Hi there, traders. This is Brad Gilbert with the FX Market Insight for Tuesday, the 24th of March. All right, now the Fed's come out with some extra policy stimulus. Now, what they're going to do is not only sort of buy bonds, but they're also going to start backing businesses directly, right? Small and large businesses are going to get direct financing from the Fed. So what this does is it takes all the pressure off the banking system, right? So at the moment, if the housing market crashes, on the banks, everything's gone. So now the central banks, the Fed are setting the groundwork. I would expect this G7 over the next couple of days, we may see more of this across the globe. And it's, to be fair, it's what has to happen. The banks have to sort of call off the dogs, let everyone with rents and mortgages, everything else just float. And then we can sort of just get through this situation. So that's the big news. Now, if you come back and have a look at the rest of the market. I mean, there's obviously a few things happening. To me, the dollar, right, if I just come back, get the mouse up here. Okay. Just have a look at the major currency pairs. Now, there's a chance here for a bit of a correction on a few of these pairs. Now, some of them have come a huge way. Aussie, Kiwi, probably sterling more than most. Euro's down here, but it's, hasn't come as far as the other currencies. But what I think we might see is a dollar correction. We might see a little pop here. Now, I don't think it's going to change the overall theme going forward, which is strong dollar, but we may see a bit of a correction on some of these pairs. Dollar CAD and dollar yen don't look like they're coming back anytime just yet. Although dollar yen, it's losing its luster at this point because, there's nothing sort of to trade the yen against. I mean, it's already been in this economic situation for the last 30 years. So Aussie, Kiwi, Euro and sterling potentially pops to the top side. We may see a short-term run, but we'll have to see how that plays out. Just looking at the dollar itself, I mean, if you look at it against the basket of currencies, of course, it is rallying across the board. But you can see up here where it's starting to stall. Now, this is where I think we might see it just pull back a bit, and we may get a chance to get some cheaper dollars in across the board. And dollar yuan is starting to move. I mean, now I can't believe hasn't got an 8 handle on it. All right, so that's where we are with the major pairs. Now, we've done a bit of toing and froing here. We've finally got things set up on the daily trade routine. Now, just having a look at this, I mean, you've got to be able to identify, if you can't at this point, like trading conditions are pretty average, right? We've got clear direction on a number of pairs, but we are sort of obviously the currencies are moving based on what happens to the announcements from the central banks and the governments, and that filters through to the equity markets and the bonds, and then it finally hits the currencies, right? So it's not absolutely crystal clear where everything's coming from. The corona, I'm sure if you're like me, you're sick of hearing about it, but that's what is driving things. Now, the active pairs. Now, I know the tables previously weren't working, so we've gone back to an old system. The active pairs here, now these are the pairs that do have clear direction. What we are missing is some of the entry levels, right? But you know what? These are the pairs that are moving very clearly, and they can create good trading opportunities for us. The watch list pairs, well, they're pairs that, you know what, if I was sort of looking at the currencies themselves, the direction's not super clear, but we do have levels to work with. So potentially short-term trading opportunities there. In fact, at the moment, I think, you're looking, you may get a good run over the course of a day and get a couple 100 points out of it, but you're clutching at straws if you think we're going to get big trending markets outside of what we're seeing at the moment. Now, the key to this week, today and tomorrow, we've got this G7, let me just clear that up, G7 meetings. As I said, you would expect the US to be probably dominating things. Now, this is an online meeting. Obviously, these guys aren't getting together. And then, you've got the raft of economic numbers coming through. Now, it's quite interesting. If I have a look, just take you back to the FX Market Insights, if I can get across to there. I was just having a look at the numbers, right? So just having a look on across the board, the current economic numbers coming out. What we're seeing is still really good numbers. Like this stuff, the whole crisis hasn't hit any of the major economies yet. Of course, it's hitting the Chinese numbers, but you know what? at the moment, there has been no flow-on effect. Now, this is my big sort of concern is that once we do start to get the economic numbers from these global shutdowns, the numbers are going to go completely mental, right? I can see unemployment being well in excess of 60%, and that's where, you know, the whole fear once again will creep in. So either they stop releasing the numbers until things clear up, or it's going to get choppy from here. But at the moment, if you are looking at the, where are we? Actually, wrong one. If we are looking at the major currency pairs, the currencies themselves are trading quite nicely. Okay, when you do come back and have a look at the equity markets, well, we are starting to still see a lot of volatility in this. The Dow has gone down through 20,800. It's now on the way to 10,000. And that's sort of my opinion. Look at the risk on, risk off pairs, the yen crosses. Well, even on the correlation matrix, these pairs have now lost their mojo with the equity markets. It's a complete disconnection. So we're probably almost going back to normal market conditions. You just want to keep an eye on any new releases, what impact that has on the US equity market, and that'll flow through to the rest of the market. So looking at the Asian equities at the moment, they are in the green. You'd expect that to flow across all equity markets as the Fed sets the tone for, you know, global stimulus as such. All right, and that's where we are, guys. It's quite interesting at the moment. As I said, you want to keep your position size, everything pretty tight. You're still going to make as much money with smaller positions because you're going to see these things run. My thinking is, I think we might see a bit of a correction here on some of these pairs. The Aussie in particular has got a bit of a bee in its bonnet, and it has come a long way. So I suspect we're going to see some sort of move. I mean, you know, in this current market, you know, you'd expect up towards, say, 62, maybe a spot where it settles in. It's very hard to be long here. The whole market is short, so we could see a massive short squeeze, and that may replicate, as I said, on the other pairs, Kiwi, Euro and Sterling. So just keep an eye on that as we go through the next 24 hours. All right, guys, that's it from me. Hopefully the site updates do give you a bit of a helping hand, which pairs to focus on. But as I said, these are tricky times, so don't get overexcited and put your whole account on one trade. All right, guys, have a good one. Cheerio.